Good morning, Tasty Nation. Welcome back. It's Forex Focus. It's Tuesday. I'm Glenn Freiberger. Joined with me, Mike Henley. How we doing, Mike?
I'm doing good. Bright and early in Chicago, so off to a good start.
Yeah, first and foremost, congratulations. You're self-proclaimed lifelong Thunder fan.
Yeah.
Finally got that magical moment. I've only heard you being a fan this year, so I'll give you the benefit of the doubt. But any celebrations down or celebrations planned?
They're celebrating in OKC today, so that's pretty cool. It's sad I can't be there, but the parade should be.
You're not going out to the parade?
No, Pete wouldn't let me fly out after this, so. Yeah, we'll see. It's more of a stress relief, to be honest, at the end. 2 Game 7 series in less than 30 days. So a bit relieved, but also childhood dreams fulfilled, so.
It is interesting. It was almost theirs to lose, and so one of my roommates, also Thunder fan, and he just never seemed happy because you guys had it in your mind that you were just supposed to win this. I don't know why, but glad it all worked out for you. There's no Oklahoma bar here in Chicago.
I haven't found one yet, but next year I'll be going out there quite a bit to see. So we'll be back next year, so that should be.
All right. Well, I'll do my groundwork casing the Chicagoland scene for a Oklahoma City bar. There's somehow, I went to Northwestern, there's somehow every college's bar. There's some bar for everyone except Northwestern. I don't know, they just expect you to go all the way back up to campus. Seems ridiculous. But I went to an Oregon bar last year. I went to a University of Georgia bar, and they're packed, slammed. I don't know how many transplants there are in Chicago, but seems to be
Chicago
a lot.
OKC bar, I don't think would be as packed as a Georgia or a
Probably not.
state school bars.
Are there any Marquette bars?
I haven't found one of those either. Ton in Milwaukee, but
Yeah.
Chicago, I haven't really looked either.
Again, just seems a little unfair.
Yeah.
Too close. Not close enough. So, but we've got an exciting day here. Let's hop right into the platform. What do we got for headlines overnight? We've got ceasefire or to not ceasefire. Where are we right now?
Yeah, it looks like we do have a ceasefire, but Trump was tweeting at 6 a.m. It looks like Israel is still launching missiles of some sort towards Iran, and he's trying to calm them down, but there is still an official ceasefire in place from what I see right now. It looks like Israel's responding back to an attack that Iran did right before the ceasefire. So we'll see how that continues to shake out, if there's a breakup or not here, or any more drama. It looks like markets are happy with the result. We're seeing a weaker dollar overnight. So that should be interesting. Again, maybe things change in a single headline. But for right now, that's what I'm looking at this morning.
Yeah, it seems like markets digesting all of this pretty well. For the past 2 days, 3 days since Sunday Night Open, have been surprised at my interpretation of each headline, not really seeming to stir anything really. We had in quick succession ceasefire from one of the parties, and then ceasefire agreed to from the other party, and then missiles in the air. But you said that might have been miscommunication, hit launch before before they signed anything. So everything appearing to be okay for now. What do you think changes this narrative at all? Is it another wave of missiles that would finally spook markets? Equities were up on the day. Crude oil took all of that out, the largest intraday move since 2022 yesterday, and continued through last night, down over 2% today. Do you think there's anything that could change this narrative at this point?
It's really hard to predict either of these countries or any of these countries right now, to be honest. Again, maybe it could escalate. Maybe we see a complete calm down, and this weekend was the craziest. again, really hard to say on that part of things. But what I will say is I saw reports that Iran gave Qatar a heads up yesterday before they did that attack. And I think that's when you saw a huge move on the downside with oil. So it doesn't seem like things are escalating in the craziest way that some of these dramatic headlines are saying. But still, again, war is a terrible thing. And Donald Trump called it a 12-day war this morning. So again, hopefully the ceasefire stays in place and we get some de-escalation here. Or again, maybe one headline changes everything.
Yeah, in my mind, when the events over the weekend first unfolded, the variable to me was there was some sort of misinformation or a lack of clarity on the effectiveness of the U.S. strike, and if that would play into the equation. Now it seems like as long as everyone holds the ceasefire, the talks over the long run will develop perhaps better than they have, and maybe that won't matter as much. But I know you watch a bunch of energy stocks. Are you seeing big moves in what, the nuclear sector or across other asset classes?
A lot of those stocks are so overextended. Where is the move, honestly, from oil in the 70s? And I think, is it below it in the 70s? I don't know this morning. I know it was mid 70s yesterday, and the futures was like a 14 plus downside move from the Sunday open on oil. So again, markets seem to be digesting this extremely fast from what it looks like there. And I don't know, I'm not really in the predicting space in regards to energy. I think that you would have to make that a full-time job of just understanding oil alone, and then you're factoring in nuclear or solar or these other things. So it's really hard to say on that. But what I will say is we saw such fast movement to the upside. Is there downside at play too, I think, is another question there. Because again, with escalation being priced in, do you have de-escalation being priced in? And maybe we saw that yesterday with the huge downside move in oil.
It's great that you say that, because in my mind, we take a look at this currency space here, U.S. dollar pairs. The biggest surprise to me with such a relentless equity story, resilience across markets, complete all the air taken out of the oil market. Very surprised to me that dollar Swiss franc is still holding on to and making new lows here. Here we have the hourly chart up here. New lows back to June 16th, last Monday, and coming up on lows hit last Thursday, which are the 10-year lows. If we think that this big move from 82, when was it? This initial move on the onset of this conflict was a lot of safe haven demand for the franc. Then a lot of this still very well priced in. This is the big surprise to me, down almost 0.5% today. Do you make anything of the move below 81 here?
Maybe that has to do with all the Fed speakers we have this morning. Mm-hmm. I know we had a couple already speak, with Powell going in front of the government today and tomorrow, which should be interesting. I believe it's his biannual or annual testimony. So that should be really interesting. And then there's a ton of Fed speakers after him as well. So that I think there's a lot on the plate to hear those guys push the market around with what they say today, based off rates, unemployment, inflation itself, the escalation in the Middle East, and then we have tariffs as well. And that deadline expires at the beginning of next month that he gave. So that, again, maybe that's all being priced into USD Chef, and that's the biggest reason for people piling in to the safe haven currencies. I believe USD Chef is the nation of Switzerland itself is one of the only nations with negative real rates right now too. So again, maybe that's part of it. Because when you see the United States real rates, they're grouped in with a lot of emerging markets, which I find very interesting. So is this really a U.S. debt crisis where people want all the francs in the world, and that's the reason for such strength with the franc? Or is it people just kind of moving around, repositioning with the geopolitics of things as well? Because the nation of Switzerland is a neutral nation, so that maybe is part of it as well. But again, a lot of important people speaking today in regards to people that manage the largest central bank in the world. So I think that should be really interesting for what Powell has to say and those other guys.
Agreed. I think yesterday, if you asked me, and I think Frank and I talked about it, if Fed speakers would be a headline for markets, we said not really, a lot more pressing things to worry about, but we did see early yesterday throughout, or at the beginning of the U.S. session, we had a Fed speaker say maybe even a rate cut in July, and saw an immediate bounce against the U.S. dollar. It's always funny when we do the show here around 6 a.m., 6:30 Central Time, and that was the absolute low for this market. We were calling for wondering if this would go through new lows, bouncing all the way back above 65 cents here. A remarkable rally of 2% from yesterday morning. Australian dollar definitely one to watch. Other big mover of the day, or of the week so far, has been this dollar yen piece. I mean, we started the week here, no gap from this weekend's activities, ran all the way up to 148, which broke through a bunch of support levels around 146, and now taking all of that and more out of the market. So a lot of dollar weakness here heading into this. Surprise to me that this would transpire this way. Dollar really getting no safe haven demand or any sort of relief on alleviation of the conflict itself. Where do you see this market going now back below 145?
Yeah, that's USD/JPY is a pretty interesting one. If we can pull up maybe the daily chart here, give it an even better perspective. Because again, in the beginning of 2025, we're up to almost 155 there, right, a little bit over, now sitting at 144. So again, dollar was extremely strong the past couple of years, right? Janet Yellen did an insane job of importing deflation, and then also having the dollar stronger during one of the highest periods of inflation that we've seen. So again, when we zoom out on the chart, is this just repricing with the United States cutting rates, the Central Bank of Japan raising rates, and we're just seeing the natural unwind of the carry trade? And is that still in play, or are we just back on the 140s? Because when you look at, even if you pull up a weekly or monthly chart for USD/JPY, this is a pretty big support level here. So again, it almost got rejected pretty hard off that 150 right now, a little bit below that. And it looks like we're in a range right now, and we have been since April, which was when the tariffs were announced. So again, maybe this is some back and forth till we get some more clarity on the tariffs, because when I see the Japanese and the United States representatives meeting with each other, I don't see any good things happening. And it looks like that in the market, right? When we look at price action between April and July, we see a bunch of chop there from 140 to just under 150 there. So maybe the market's looking for an answer right now. And that's why we see the range trading. And again, maybe it's just a wait and see here, because like I kind of said last week on the show, is Powell still kind of sidelined here and not really doing anything? And then kind of another question I had is, are the Fed speakers that are coming out right now, right, with another Fed chairman up for election next year, the things they're saying right now really matter, right? Because Trump appoints them, and Trump really wants rates lower. So does that factor into what these people are saying right now? Are they playing politics at the same time?
Not supposed to be, right?
Yep.
But maybe they are.
Right.
But yeah, a lot of interesting storylines in this market. But I want to make sure we have enough time for our segment today. So if we could cut over to the slides, please. We've got an interesting one for you all today. Looking at FX and crude oil correlations across different volatility environments, hopefully topical background here, because crude oil volatility has picked up so much over the past 12 days on the onset of what hopefully is only the 12-day war, as being called right now. And U.S. dollar, surprising to me, the price action that it hasn't gotten the typical safe haven demand that it historically commands in times of geopolitical tensions. And the last wrinkle to the background here, that the U.S. is much less reliant on the Middle East and other regions for oil production, and so has shaped up to be a very interesting mix for price action in crude oil and the U.S. dollar. Is there any more background here that comes to mind for you?
My interest, I was looking at like the United States rig count, and that seems to be decreasing for months over months, which is pretty interesting. But then you look at the United States oil output itself, and we're drill baby drill right now. So those two factors maybe play a little bit more into the outcome of the price of oil, right? Because the United States is a huge exporter of oil. So maybe the United States has more room to work with, right? Because in the past, when things happen like this and there was embargoes and blocks on channels and straits, does that affect the price of oil just as much as it did historically is the question I have? Or have times changed and commodities are largely priced on supply and demand, right? So is that supply not really a worry anymore? Plus weak demand because of global shipping right now also is a positive sign to stress supply chains. So is that like the biggest worry to me, or was that the reason for the huge downside move also in oil we saw yesterday, right? Still trying to piece things together and see how they play out. But that was kind of a question I had there.
For sure. And so what we did, we looked over a 3-year time horizon, so 2022 to present, so not factoring in all of those crazy COVID times. We analyzed USO, crude oil ETF, and 6 major US dollar pairs. And we used that ETF to get the implied volatility, and we segmented that into quartiles by dates. So that's how we determined a low volatility over this 3-year time horizon, as well as high volatility environments. And what we have for you is our correlation matrices that include not only each FX pairs to crude oil, but as well as to each other, which it turns out gives us a little more interesting conclusions than the crude oil story itself. And while we're on it, the oil volatility that we've seen now can be served as a widespread market volatility gauge in times like this, as well as some other occasions where there are elevated inflation environments, when there's speculation around monetary policy as it pertains to inflation and across the commodity space. So first, what we got is, again, across all volatility environments, we see, looking at that top row from left to right, we'll see the crude oil correlation against the Australian dollar, euro dollar, pound dollar, dollar Canadian dollar, dollar Swiss franc, and dollar yen. And what you're seeing most correlated would be 1 or -1. Uncorrelated, moving completely independently, would be 0.0. And so nothing here from a crude oil standpoint really stands out to me pretty uncorrelated to these major dollar pairs. And looking across the rest of the matrix, we have, in my mind, what would be expected FX correlations to each other. We have European currencies of euro and pound moving very similarly in tandem against the US dollar. We have historical commodity correlation, or commodity currencies moving in opposite, or moving together.
Same direction.
Yeah, same direction in the dollar, CAD, and Australian dollar. And anything else stand out to you here?
No, that was pretty interesting. Kind of what's interesting me on this slide itself is the correlation between Aussie and CAD. I didn't realize they had that big of a correlation, but pretty interesting as commodity currencies. That makes a lot of sense. Same with euro, pound, and yeah, I would say that makes the most sense. I know when you look at USD CAD, that's, even though there's not really a correlation, that's the most correlated in that, from what I see in all vol environments, which is as expected. Same with USD Chef. Pretty much no correlation there, which I expected there too.
Yeah, and perhaps the biggest takeaway is the most uncorrelated move in the currency space would be that dollar-yen piece to crude oil. But segmenting, in particular, high volatility environments, we see a little bit more of an interesting story shake out. We have elevated correlations across the board between crude oil and US dollar pairs. Again, that US dollar, Canadian dollar, the outperformer, but still a pretty modest correlation at negative 0.34. Nothing else really there, but my main takeaway here is that you do see elevated correlations across the FX space to each other. So what that tells me is when crude oil volatility is at its most extreme, it turns into, in the currency space, a lot more of a US dollar story than any of these independent regions or countries on their own against the US dollar. So in times of high volatility, US dollar moving unanimously across the board one way or the other. Then in low volatility environments, the bottom 25% of oil volatility days, we see very low correlations across the board, more than in the normal environment, to crude oil and even against FX pairs, among FX pairs themselves. So we see a slight uptick in the correlation among European currencies, so that euro dollar and pound dollar, slightly higher. Those commodity correlations sticking in as well. But what this calls out to me is that perhaps in times of low volatility, it's less of a dollar story, and other currencies are free to move on their specific or independent economic factors, and less reliant on a volatility story. So nothing really surprising from any of this. I mean, the main takeaways to me are, in the long run, no real correlation among individual dollar pairs to crude oil. If you're looking for a historic outperformer, US dollar, Canadian dollar, perhaps is the most correlated, but as we know, past performance, certainly not indicative of future results. But in high volatility environments, you do see those correlations starting to elevate against crude oil and against the US dollar itself. So that dollar storyline playing through. And low volatility environments gives you the most dynamic environment for all of these individual currency pairs and crude oil to move independently, less reliant on the US dollar. Any other conclusions?
No, that would make sense, right? Because when you're looking at high volatility environments, that's really when you have a bunch of main factors at play in the market, right? And then low volatility environments is where a bunch of sub factors kind of start to take more importance. So not really a surprise at anything here, but it's cool to see data showing exactly what you're talking about there and seeing it play out in real time.
Absolutely. So there you have it from our study of the day. Not as surprising as maybe we hoped, but topical nonetheless, and nice to have that data validation. But a lot ahead for this trading day, so stay tuned to Tasty Live for Mike and Nick, I believe, up next.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to